Today, we're going to talk about how health insurance works in the USA. If you're watching this video, then you might be new to the USA and wondering how health insurance works in this country. Or maybe you're just confused about it because it can be pretty confusing. So if you want to learn more, then you want to watch the whole video. So let's start with what kind of plan is best for you. So when I meet with clients, I ask them questions, right? So let's say I'm talking to a client and they say to me, it's very important for me to keep my doctor. I want to keep going to Dr. A, Dr. B, and Dr. C. Okay. And so what probably is the best thing for that person is, and if this is you, it would be the best thing for you most likely, would be to look for a PPO. A PPO is a preferred provider organization. Typically, PPOs have a wider range of doctors and hospitals and wider access to doctors and hospitals and more of the top tier doctors and hospitals that you can choose from. And also you can go directly to specialists without having to get a referral from a primary care physician. A lot of times PPOs will also cover you outside of your local area. Like some of them will even cover you outside of state lines. So if you're someone that travels a lot, that's probably going to be a great option for you. If you don't care that much about, let's say, having your choice of doctors and you don't really have one that you want to keep and you want to maybe pay a little bit more or a little bit less, there might be a HMO might be a better option for you. So an HMO is a health maintenance organization. And typically with HMOs, they're a little bit smaller. Well, they can be a lot smaller networks. They give you like a little choice, a little set of doctors and hospitals that you can choose from. And you really must stay within that network. That's a pretty localized network. And if you're okay with that, and that works for you, then that might be an option for you too. Typically HMOs, especially if you're talking about the marketplace, an HMO might be a little bit more affordable. And you do have to go get typically you'll have to go get a primary care physician referral before you can go see a specialist. Another option that you might want to consider is an HSA, which stands for Health Savings Account. So with an HSA, it's only certain plans that are HSA compatible. And these plans have to have a high deductible. So it's a high deductible plan that would correspond with an HSA account, which is a health savings account. And so what that allows you to do is if you have a high deductible on your plan, that means that you're going to be paying out of pocket. Unless you have something really big that happens to you, like a major, emergency, you're going to be paying out of pocket for like the day-to-day stuff until you hit that deductible, right? And so what the HSA does is it allows you to funnel pre-tax dollars into an account that then you can pay for qualified medical expenses with. And so you can use that pre-tax money to pay for all those expenses that you're going to have to pay out of pocket until you meet your deductible. And so it's another way to save money and also, get a good deal on your taxes. Another option is in the private market, and that would be an underwritten plan. And typically these are PPO, the preferred provider organizations. So I kind of see these, and I'm a little biased because I have one of these. I see these as like the best of both worlds and it's not for everybody, but if you're healthy enough to pass the medical underwriting on these plans, you can kind of like lock into a plan that then stays with you for the long term. And so why that's beneficial is, first of all, the PPO itself a lot of times is a nationwide network, what I hinted at the beginning of this video, that you could move from state to state, you could travel and have the same coverage anywhere you go in the United States. Also, if you do move, you don't have to continue changing your insurance and starting and having to get used to a whole different, way of doing it. You can keep the same plan and it can really grow with you. And over the years, being underwritten when you're young and healthy can save you so much money over the long term if you're really able to get underwritten and stick with the same plan. So let's say you're young and healthy and you get on one of these plans and then later something happens. Some of these plans are designed so that you can stay on. They're renewable until you're 65, no matter what happens. And so that really gives you that sense of security that even if you come down with a pre-existing condition or something god awful like cancer, that you're going to be able to get the treatment that you require and you're going to be able to stay with your insurance. Another thing that I want you to consider is when determining the kind of plan you want is looking at the monthly premium, the amount that you're gonna pay every month versus your out-of-pocket costs on the back end. Okay, so the monthly premium is what you're going to pay just to have the insurance policy. To keep the policy active and enforced, you're going to pay this monthly premium no matter what. Okay, so make sure that if whatever amount that you do choose on whatever plan, that you're able to afford that monthly, because that's gonna be required in order to keep your policy active. And then you're gonna wanna compare that also to what the out-of-pocket costs are on the back end. So out-of-pocket costs, by saying that, what I mean is deductible. The deductible is the amount that you have to pay into the plan. So besides your monthly premium, the amount that you're going to pay out of pocket until you meet it, that then the insurance company will kick in and cover you, okay? Either at a percentage or in full. And so you're really gonna wanna make sure, like the way it works is typically, and this is on the marketplace, you're gonna have the plans that cost less money per month, so lower monthly premiums, typically are going to have a larger out-of-pocket cost on the back end. So whatever that if you do choose one of those, whatever that amount is that you have to pay on the back end, like make sure that you can afford it. Make sure that if something happens to you, that you're able to pay that comfortably, and that's not gonna really put you in a financial bind. And then if you have a higher monthly premium, if you can pay that monthly amount and it's higher, typically those plans are gonna have a lot lower costs on the back end if something happens. So at the end of the day, if you really compare it, it's just a numbers game. And I'll give you an example. Like if I have somebody that comes to me and they have like a really serious kind of pre-existing condition that they take very expensive medication for example, I know that person is most likely going to meet their max out of pocket, and they're probably gonna meet it pretty early in the year. So for someone like that, I'd probably recommend a higher level plan that's gonna be more expensive on the monthly premium and then less expensive on the back end, just because you know that they're going to meet it. So there's a lot of different options, and as a licensed agent, one of the things I love to do the most is really put my creativity and my experience into every situation that I tackle for a client. And so there's so many different ways that you can build a policy and put together a plan based on just what the client wants and what their values are. And that's what I love to do the most. So if you have any questions about that, or looking to change coverage, you don't have to wait until the end of the year. Reach out to me now and I'm happy to let you know what we can put together for you. You can reach me at alexthehealthagent.com and also at alexthehealthagent on Instagram.